MYX is a decentralized perpetual exchange that is capital efficient and really built for long tail assets and adaptive liquidity. If you want to get started, check out the link in the description. This decentralized perp leveraged platform focuses on capital efficiency, like I said, with adaptive liquidity and a simplified execution model. Today, we're actually going deep into the architecture, the products, the fees, the liquidity design, the risk frameworks, and how it actually compares to other DEXs like SynFutures or Enclave X and other perp DEXs, right? So where MYX fits in this whole perp DEX revolution, I think in 2026, definitely it falls into clear categories. Some optimize for kind of maximum efficiency, right? And other DEXs are really focusing on privacy, and some on permissionless experimentation. And I mean, MYX actually really kind of belonging to a whole class in its own self, rather than competing directly with hyperliquid venues. For example, institutional order books, DEXs. It's focusing on a quieter but increasingly important niche, right? There's capital efficient perpetual trading for long tail assets in emerging markets, where it's not built for headline volume or high frequency warfare. It's built for adaptive liquidity, like I said, with measured leverage in markets that actually evolve over time rather than exploding overnight. And this is what we're getting into when we're looking at this whole platform. Unlike the permissionless market factories, MYX is definitely curated, really focused also on a flexible approach, aiming to balance innovation and stability here, and of course operating on a focus on risk containment, making it pretty attractive for traders who want to have exposure beyond majors without stepping into the highly experimental territory. So if you look at the core design that they have obviously the high capital efficiency focus over the raw leverage, prioritizing smart margin rather than extreme leverage, right? The goal is to allow traders there to deploy capital effectively across positions without kind of encouraging destructive behavior, which is really great because you have also the adaptive liquidity that I was been talking about constantly in this video, rather than kind of focusing on those rigid order books, right? You have adaptive liquidity model to market conditions, allowing kind of smaller markets to function also sustainably, because we've seen that when the markets are very volatile, those markets that are really small within liquidity tend to have a lot of manipulation there. So simplicity enables its longevity, I think, avoiding over engineering, in this case limiting complexity, reducing smart contract risk, as well as kind of improving just that long-term reliability, which is really all kind of evident within the architecture and the execution model that they're employing, with a broad wallet compatibility, low transaction cost, predictive kind of execution, easy integration with the existing DeFi tooling as well. And like the pricing model is very good as well. And the products that they offer, of course, perpetual futures, which is pretty much the core product that they have here. These contracts have no expiry, and you use funding payments to track the reference prices, and they're settled in stable collateral markets, typically focusing on emerging crypto assets or ecosystem tokens, and select majors for hedging. So long tail asset exposure here, kind of a distinctive feature, right? With something to focus on rather than listing every asset indiscriminately. They are actually curating markets based on market and demand and risk, and also gradually increasing leverage as liquidity grows, and also removing kind of markets that fail to sustain healthy activity, which results in fewer markets than permissionless platforms by higher overall quality, in my opinion. And the margin, leverage, and the risk framework are pretty solid in terms of using isolated margin, ensuring that each position is independently collateralized, benefiting you really when it comes to clear liquidation levels and understanding those without systemic contagion, or simpler, just having access to that simpler risk management as well. And the leverage policy itself, lower leverage for new thin markets, like I said, incremental leverage as liquidity increases, and strict maintenance on margin requirements, which is very interesting. So they have a token which has been pumping as of late. I mean, it has pumped a little bit, I've seen, and you can trade it on major exchanges, MYX, on Gate, on Bitmart, on XT, on BitUnix. The links to those platforms are in the description, so you can get yourself some incredible discounts on fees. And talking about the trading fees with MYX here, we've got competitive maker and taker fees and no hidden costs, as well as fees that are designed to support liquidity providers, which is great. And the funding rates occur at regular intervals, reflecting long and short imbalances. They're intending to be smoother than highly speculative platforms. So that's really something to think about. If you want to see the full review, we've gone into the market dynamics as well as the liquidity profile here of MYX, and just the user interface and experience is really good, clean, focused trading flow as well. You can also see that in the risk management and liquidations and all the long tails consideration and risk models for security, and also compare it with other PEP DEXs, right? We've done a comparison with SynFutures, Enclave, and also Hyperliquid. So I think if you are somebody who's a trader seeking long tail exposure and risk away derivatives trading, medium-term positioning strategies, this is really something that you would want to check out for stability over hype. Go check out the full pros and cons. It's a really interesting platform to get started on MYX. Check out the link in the description so you can get great discounts to get started. And I'll see you guys next time.